Did you know that when buying a condo, it's not just you as the borrower who has to qualify, but also the condo itself? That's right. So today I want to dive into a brief overview of what that condo review process looks like, as well as the 4 different condo loan types. Let's dive into it. So regardless of the 4 different loan types available for condos, each of them has to go through a condo review process. During this condo review process, there are 4 important documents that are reviewed in detail to ensure that the condo complex meets the guidelines. The first one is the HOA lender questionnaire. So that's the homeowner association questionnaire that a management company will fill out, and it details information about the building. How many units are there? How many of them are owner occupied? How many of those owners are behind on their HOA dues? And if there's any pending litigation that might be going on, or any other important information regarding the insurance or the budget. So the next thing are the CCNRs and bylaws. And this is basically the condo's rulebook, where they want to make sure that there isn't any restrictions as it comes to being able to resell the property if a lender ends up having to foreclose on that property, and making sure that there isn't any discriminatory language that would go against any fair housing or any fair credit laws that are currently in place. The next thing is the HOA budget. So they look at how much they're collecting monthly, how that money is being spent, how much of it is being saved for future repairs, and just overall making sure that the HOA is financially stable. And finally, they look at the master insurance policy. This is the insurance policy that covers the entire complex. And each of the master policies will differ depending on the complex. But what we're looking for here is how much coverage do they have? Is it adequate for what is going to be required based on the guidelines for that complex to be lendable? And does it cover just the outside, or does it cover the outside and what's also called walls in, meaning it also covers the interior of each individual condo? Now, if one of these documents is either missing, outdated, or has any red flags, it could impact the eligibility of that particular complex based on the different loan options available. So now let's dive into the 4 different types of condo loans. First, there's VA, then there's FHA, then there's conventional, and finally, non-warrantable. So for VA loans, if you're a veteran, active duty, or an eligible surviving spouse, this could be a great option. They offer 0% down options, and they don't have any mortgage insurance. One of my favorite things about a VA approved complex is that once it's approved without conditions, it doesn't expire. So even though budgets might fluctuate, there may be certain things within the complex that may occur over the years, it is not going to impact the eligibility of being able to get VA financing in that particular complex. So next on our list is the FHA approved complexes. And these are good for 3 years at a time and then are set for renewal. Sometimes an HOA management company will just automatically do that renewal, or they will just let the complex renewal expire, or maybe it was rejected during the renewal process for one reason or another. If for some reason a complex was approved and then it's not currently approved, one of the nice little things that's available in that case is what's called a single unit approval. And what will occur here is that although that particular complex is not FHA approved as a whole entire complex, a lender will still want to review those 4 documents that we talked about, but they will do an FHA loan just for that particular single unit. Next on our list is a conventional loan. And this is the most flexible, just in the sense that there doesn't need to be an actual prior approval of the complex before we submit the loan to underwriting. So it can already be on an approved list because both Fannie Mae and Freddie Mac have their own condo list and search that our underwriters have access to, but it doesn't need to be on the list prior to application or prior to getting an appraisal done. So they still need to review the documents that we discussed earlier, But if it's already on the eligible list, then in most cases, we only have to show the updated master insurance policy because the other items had already been reviewed. Now, if for some reason it doesn't meet the guidelines for Fannie Mae or Freddie Mac, then the condo complex is considered non-warrantable. And that leads me into our last option, the non-warrantable loans. Now, with a non-warrantable condo, it just simply means that it doesn't meet the guidelines that are currently set by VA, FHA, and conventional loans. And while it can sound scary, it doesn't need to be because we just look at these like they're just a specialty type of loan. The homeowner association or complex may have some stuff going on that's a little sticky. Maybe it's an ongoing lawsuit, or they just have a high number of renters versus homeowners, or maybe they just don't have enough cash in their reserve budget right now because they had to do a recent big job like replacing roofs or fences or something else that kind of just ate away at the reserves, and they're still building those back up. So while VA loans have a no down payment option available, and FHA and conventional loans have a low down payment available for first-time homebuyers and non-first-time homebuyers, the non-warrantable condos want to see at least 10% down. But the more you can put down, the better, because the lower the down payment, the higher the rate. And these types of specialty loans usually come with a slightly higher interest rate anyway. So how do you know which of these options is going to be the best fit for you? Well, that's where I come in. And if you've ever played the game Guess Who, it's exactly how this process will go. We will have our options available to us, and it will just be a process of elimination. So I'll help you figure out which program you qualify for, and then I'll work with your realtor to help find which condo complex is going to fit in that program for you. I've helped buyers navigate VA, FHA, conventional, and non-warrantable loan financing options in all different types of condo complexes, and I can help you do the same. All of my contact information is below, and I'd love to have a 15-minute conversation with you to find out what's going to be the best fit for your situation. If you found this information helpful, please remember to subscribe, like, and share it with a friend. I hope you have an amazing rest of your day, and I'll see you again next time.